And then given this COVID and all the disruption that it caused, what was the impact on the bank with existing customers in terms of NPA, in terms of moratorium, or any other parameter that is important?
The good part is, like I mentioned in the earlier part of our conversation, that we were very choosy in terms of starting this business. Now, when we look at hindsight, obviously none of us knew that pandemic will hit us and hit us so hard. It actually helped us because you were with the best of the names. So if you look at the NPA numbers for the CVC industry, for us in particular, it's been hovering at a record low levels of 1%. Now, obviously, part of it is it's a new book, part of it is small base, but it is also the fact that we have been very conservative in our approach of doing this business. So this has helped us considerably, and we hope, like I said, to continue on asset quality. I don't see too much of a challenges. Obviously, we will go down the risk spectrum, we will grow the book, but by and large, we are very focused on asset quality. Because of the pandemic, the moratorium was offered. Many of the people did opt for that part, which was a part as industry-wide thing. The important part is how are they paying you post that? And touch wood, by this thing, I think I can sum it up by saying that we all have a very good night's sleep because we don't have issues and challenges over there. So the post-moratorium book also of the bank has been extremely good.
Did the bank have to make any major changes in its collection process or collection technologies or collection policies to cope up with this sudden pandemic?
I will give you a more generic one. Probably Shekhar can probably highlight more if you would want to. The main part in the commercial vehicle industry is how close are you to your borrowers, the person who calls them up. And one differentiating factor which one needs to understand is to understand where the problem is genuinely facing an issue and a customer who's leveraging on the issue. As long as the former, we are very clear about it, we'll be supportive. We are not a fair weather friend as a bank. We also understand that if he's not going to ply his vehicle, there's no hope in hell that he will be able to pay. Right. So we were willing to go with the customer the extra length in terms of granting moratorium, giving him GECL loans, the government guaranteed NCGTC backed guarantees. We have given those loans also. However, while doing this, we have also ensured that the borrower has also put more skin in the game, which means he's also trying to, it's not that his entire pain has to be shouldered by the bank. So we shoulder the large part of the pain, but also expect the borrower to chip in as well. So it's more about the ethos that you are participating in it together, and it's not, oh, it's the bank holding the baby kind of a thing. So this is what our approach has been, and by God's grace, it has paid off. Our collection teams has obviously been beefed up during pandemic times even more. And we have been fairly close touch with our customers. In fact, in the last 3 months, we have seen quite a few upgrades also. So that's something which, yes, exactly. So this is where we are at.
As you rightly said, we have been fair to the customer, understanding his needs and helping him out in restructuring or the ECGLS loan where the concerns were genuine. And we have also held them in coming out of the situation. Now, having said that, we had a regular, rigorous follow-up with these customers, and we have been able to collect our dues. And secondly, the best part is in the last 3 months, as Harsh rightly pointed out, though we have been able to normalize some of the NPAs accounts, there have been no fresh slippages to the NPAs. I think that is more creditable in the sense getting your money from some customers and normalizing is to a very large extent depending upon the customers also. But having no slippages to NPAs in the last 3 months, I think it shows the real.
One question I was curious to understand is what is the typical loan to value in this industry? And what is the LTV that Federal Bank typically works at what level?
Yeah, I will answer it. Yeah, I will answer it in 2 ways. One, you have to compare yourself. With other banks and standalone finance companies, and you should also compare yourself with captive finances. For example, I don't know whether you should quote names, but just for your understanding, I'm saying. For example, Tata Motor Finance is a captive financer, right? And they would be morally obliged to give better LTVs to their customers. For example, in the SCV space, they will give even 100% LTV to their customers on the ex-showroom price. Okay, similarly, maybe a Hinduja Finance will give preferential treatment to its customers as far as LTV is concerned for their own product. But in general, if there is a standalone NBFC or a standalone bank, strategic customers, you can go up to 85 to 90. But first time operators would be around 65 to 70.
So this whole lending industry, the whole financial sector is becoming more and more data driven. And there is structured data. And of course, there's an increasing role of unstructured data. So for Federal Bank in this space, what kind of structured data is becoming more meaningful? What kind of unstructured data is beginning to play a role? And how are you using that data, different types of data?
The structured data, of course, are the traditional financial appraisals that we have. Generally, you have the bank statements, you have the financials, you have the customer's track record, his fleet size, etc. Those are quite standard. But as far as unstructured data is concerned, that I think has to be from something which you develop on your own based upon your past experience and your instinct. So apart from this standard data, we have a score model for all our customers based upon our experience over the past few years. So which has been very, very helpful in the sense that it has helped us to keep the delinquencies down and even our overdues and NPS under control. Then what I was saying is, apart from the standard financial parameters that we follow, I think we have developed an in-house credit rating model for the customers based upon our past experience and the experience of the team which has been with the in the commercial vehicle industry. And that, I think, has to a very large extent helped us in getting a fair assessment of the customers. Secondly, we also give a lot of emphasis on meeting the customers, understanding his understanding of the business and what the applications for that asset would be, and also his references. I think our in-house team's experience in dealing with the commercial vehicle space has added too much of value rather than plain analysis of the financials of the customer.
Do you, many of your customers, or maybe not many, but some of your customers might have other parallel businesses as well, apart from transport or construction or whatever, construction equipment. How do you take that into account when you look at a new customer or an existing customer?
Yeah, basically, if the classification of the customer is whether he is a transporter or if he is a user of that asset, that means he is going to use the asset for his own use. So that is what we call a captive usage. Okay. If the asset is going to be used in the transport industry, then it becomes a transporter. But if he is for the own consumption, suppose he is running a quarry or he has a construction business. So maybe he would require the asset for his own use rather than giving it on rent. So in those cases, of course, you will not have a track of this kind of assets unless he has brought those, unless he has similar assets in the past. But then we would go on the success of his present business and any comparable loan that he would have taken in the past. In which case, again, the CIBIL score and the repayment track will help. But of course, it won't be an apple-to-apple comparison because buying a car for personal use and keeping a very good track is very different from buying an MNHCV or a backhoe loader on an excavator and using it and repaying it. Cars is for personal use and he will have to pay it through his savings. But in case of a commercial asset, he would pay only if he earns from that asset.
It's a productive asset, no?
Unfortunately, yeah. That unfortunately is the psyche of the businessmen in our country. They would not like to repay from their personal savings for an asset which they have bought for personal use. So it is extremely important for us to understand that when he is buying an asset for commercial use, he understands the usage of the assets. He has a fair idea of what revenue he is going to earn, and he is fairly successful in his present line of business. He may have his saving, but he may not pay from his saving for the commercial asset. So that is one peculiarity we have to take care while lending to a commercial vehicle customer.
What is the ratio of transporters versus captive
users?
Very less, very less. I think 90% of captive users will not be more than 10 to 12%. And they are by far very large operators. Other than that, 80 to 85% of the customers would have less than 3 vehicles with them.
What about this car taxi business, Ola, Uber and all that? Are those kind of customers for you? And if yes, then can you give a little data?
Yeah, no, I would, for example, during the pandemic, 3 segments of customers became non-starters or showstoppers, I would say. No offense meant to the industry as such. One was the tourist operators, in the sense, your bus operators who go from one place to another. The second were the staff buses. For example, of course, in Bombay and say Pune or Bangalore, where large industrial units are there, where you have, or if you have strong IT hubs or educational hubs, staff transport business is a huge business. And that is category number 2. And third is, of course, the school segment. Since the pandemic began, the industry which has been hurt the most, I would say, is the buses segment for tourist operators, for car taxis, Uber and others, and even for school and staff transport buses.
Right.
Basically, the passenger commercial vehicle segment.
Yes.